Okay, everybody, it's me, Gregory Mannarino. It is Friday, May 27th, 2022. Get ready for this one. Where do I start? Two things this morning are going on, and it's being propagated by the mainstream propaganda ministries as, something good. Let's start off with personal spending. People apparently are spending more, and this is a good sign. Well, let's see. We have surging inflation. It's out of control. So, can I get a big fat duh? People must be spending more in an environment of rising inflation. That's just part of it. The second half is, and we've seen this throughout history, I've covered this before, in an environment of surging inflation, people want to buy things before the prices rise even further, so they're hoarding. Now, there's another little caveat here. People continue to borrow at an epic pace. Okay, they're melting down their credit cards just to make ends meet. Okay, so that's a big part of this too. Think about something else here. 65% of American families can't even come up with $500 in case of an emergency or in the event of an emergency. That's because we're all rich. We're doing so well that 65% of American families cannot come up with $500 in the event of an emergency. Yeah, that's how great we're doing. It's pretty pathetic. Now, here's the other story. I'm laughing. I just can't handle some of this stuff sometimes. It's really the truth. So if you turn on, again, CNBC, Bloomberg, Fox Business, pick one, and they're all happy and gleeful because the Federal Reserve's favorite index that they use to gauge whether inflation is moving higher or slowing, well, according to what they're saying, is this index, it's showing us that inflation is peaking, that inflation is actually slowing down. Well, I always tell you that the truth is hidden in plain sight. Here it is, right off of the Federal Reserve's own website, the PCE index. How does that look? Looks like it's almost going straight up. I don't see a damn thing going on here, but apparently, oh yeah, this proves that inflation is slowing. It's bullshit. Okay, you see, here we are with another classic example that they're trying to convince you that what you're seeing with your own eyes is not real. They do this over and over and over again. You can't make this stuff up. It's impossible to do. But this is look, I make a joke about this environment being a freak show, but it is an absolute freak show on an unprecedented scale. The lies, the distractions, the deceptions, the look here, don't look here, the truth being hidden in plain sight all the time. Make it up. Make any of this stuff up. Anyway, so on the back of all this here, again, it's out of control. It really is. We have a stock market this morning that I would say appears to be neutral with regard to the setup. Stock futures are higher, pointing towards a gain at the open. Trading doesn't start for about 28 minutes. Okay, lovely. And if things don't change, we'll get a bump higher with regard to the major stock market indices. But let's look at the setup here. 10-year yield 2.75. We need this to move higher. So many people, read the comments, do not understand the dynamic here, and they're putting me down. Oh, Greg doesn't understand it. Are you kidding me? This is so in your face, the concept behind this. A lot of people don't also realize, no matter how many times I say it, that the dynamics of the market are constantly changing. And this is what makes a job like mine challenging. Okay, trying to measure these things against each other. Okay, it's not static. So in this environment, for the God knows how many times I've said this, you must factor that in. And in this environment, with the Federal Reserve raising the federal funds rate, the 10-year yield should be above 3. And when we get there, and as we get there, in my view, if we see that 10-year yield rising, that just means cash is leaving the debt market. It's going to look for somewhere to go, and it's going to go into the equity market. It's been doing this as of late. And as I also said, the MMRI, Mannarino Market Risk Indicator, has been coming down, saying risk in the market is waning. It's coming off a little bit here, and look how the market has responded as of late. This is right on my website for all of you, traderschoice.net. There is a direct link down here. Take advantage of these things, and take advantage of the chat room that I have set up for you on my website, 100% free. I hope you utilize that resource. So like I said, stock futures are higher. 10-year yield $2.75, slightly weaker this morning. Crude oil under a fractional amount of pressure. So I'm going to say it's neutral. We'll see how this day plays out with regard to the market. It could go in either direction. We've put on some nice gains here in this market. Is it possible that we sell off a little bit? It's possible. But in the face of what's happening here, it's also extremely possible that the market could put on further gains today. I sincerely believe that it appears to me, again, a few things must happen. I'll cover them again real quick. That this market could be poised for a pretty large move higher. But again, the 10-year yield must rise. And I'm not talking about in a big way, in a slow, measured way. If we see big moves, bang, 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 that means, there's a big sell-off going here with regard to the debt market, and that will put pressure on stocks. It has to be measured. You understand? I've covered this a million times. Okay, so the 10-year yield must play. The financial sector must play. Banks especially have gotten pummeled as of late. They're catching an extremely nice bid as of late, and it looks like that has legs, meaning it looks like more is going to happen, and that would again be a positive for the stock market as well. Tech also has gotten decimated as of late. And again, that needs to play too. So 10-year yield needs to play, banks need to play, tech needs to play. Very simple. And it looks like they want to play, at least right now. We'll see if this changes. But right now, if you look at the dynamics in the market, it's pointing towards more gains moving forward. Doesn't mean it's going to happen today. It could happen today. I think we're neutral, but we got to see how this evolves. Anyway, let's look at a few other things. Bitcoin, cryptocurrencies still stuck in a range. Bitcoin just over 29,000. Gold and silver catching a nice bid this morning, especially silver. I already covered crude, which is under some pressure. A little bit, very, very slight. And I told you, look, we've had five consecutive weeks of gains with regard to crude oil, WTI. And that's just, it's stupid. All right, you need a pullback, and a pullback here with 5 weeks of gains would be bullish. And you know my take on this. Crude oil, commodities in general are going much, much higher, much, much higher. And again, I'm just going to throw this out here from a while back. I have explained to you all, you need exposure to commodities. You need exposure to oil and gas. Commodities, you can pick several different exchange traded funds, how to do this, or an ETF. I threw out PDBC. This has performed very, very well. Oil and gas companies have absolutely ripped the face off of everything here. Honestly, ExxonMobil, or ticker XOM, Chevron, CVX, Devon, DVN. I mean, these have gone crazy as of late. So you need some exposure here, in my view. But again, look, always do your own research. Don't just jump into anything without understanding what you're doing, no matter what it is. I mean, even if, for example, I know there's a lot of people here who like myself, who believe sincerely that you must be betting against the debt, becoming your own central bank, holding units of wealth. I'm referring to physical metals here, despite the rigging that is going on in here, in this market here. Imagine, again, let's talk about that just you new people. It's an insane upside down system, the way it's set up, how the hard asset derives value from a derivative. Generally, it's the opposite way. But it's set up this way so it can be rigged by the powers that be, and I'm specifically pointing my finger at JP Morgan, who's the biggest rigger in the face of the earth with regard to precious metals, and nothing will ever happen. They're too big. They can do whatever they want. Everybody knows what's going on. Even the commodities exchange, everybody knows it. But this will continue good to our benefit until it doesn't. This can't go on forever. It can go on for a long period of time, and I smile when I see gold and silver take a hit. With regard to cryptocurrencies, I'm not going to change my stance on there, no matter how many of you write to me about it. And believe me, I get thousands and thousands of emails every freaking week. I can't keep up with it. I apologize if I don't write back to you. I would need 5 secretaries just to handle my email and the questions that I get. It's pretty much out of control. All right, so look, that's the story here. The propaganda ministry playing up, oh, people are spending more. Fantastic. This means they're really strong. Up, the consumer is great. Meanwhile, all they're really doing, these people, is borrowing beyond their eyeballs, trying to make ends meet here. Dumping dollars is really what's happening. That people are buying things now because they're anticipating prices continuing to rise. Oh yeah, but look, here it is, hidden in plain sight. The Federal Reserve's favorite index when it comes to looking at inflation ain't going nowhere but higher. They know it, but again, they're going to twist your mind and tell you that what you're seeing with your own eyes is not real. That's just something that goes on over and over and over again. It won't stop in this managed, propagandized environment that we are in. It's totally freaking out of control. Anyway, so that's it, people. What else do I want to cover with you? I wrote a few things down this morning, but that's pretty much all. All right, you know what to do. You know what to keep your eyes on today. Keep your eyes on that 10-year yield, 2.75 last time I looked at it. We want to see that moving higher, okay, in a measured way, incrementally. We don't want to see bang, 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 bang higher. You got it? We don't want to see 10 basis points swings repeatedly, one after the other. That would be a sign of a debt market meltdown, and that is going to destroy the stock market. Again, look, there's a lot of people here who say, oh, Greg is blind. Greg doesn't realize a crash is coming. Duh! Really? I mean, before anybody else, I've been saying that the S&P 500 has the potential to crash 80%. Since I said that, there's a lot of other guys jumping on that same 80% bandwagon. That was Greg Mannarino, okay? That's the truth. And that might be conservative, depending on how bad this gets. You always have to realize and be ready for a worst case scenario here. And again, the stock market crash that everyone's anticipating, the mother of them all, is not going to start in the stock market. It will start and end with a debt market implosion. So get that through your head, please, okay? We are not in a crash right now in any way, shape, or form. The S&P 500 has yet to even fall into bear market territory. And again, oh, we're crashing. Make that up too. Can't do it. All right, look, this guy here loves you a lot. I mean it. Please share the video. Get it out there. Comment. I'll see you at the end of the day. By the way, just real quick, this market is closed on Monday, which means I get an extra day off. So do you. And anyway, I just wanted to let you all know that. But I'll cover more of that later on. I'll see you later. I'm out of here.